Houston Real Estate Radio starts right now.
Welcome back. You're listening to Houston Real Estate Radio. If you've got a real estate question, you can give us a call, 281-882-8088, and we'll be happy to answer your real estate question right here on the air. Our number again is 281-882-8088, and you don't have to call right now. You can call anytime during the program or after. All right, so we are back in the studio, and Mike Lesmeister is here from Ameripro Funding. Welcome to the show, Mike.
Thanks for having me.
You've
Always
been
good
on
to be
before,
here.
and you always bring us some really great information.
Well, thank you. Thank you. Happy to be back.
All right, so Mike is with Ameripro Funding, and they do a lot of pre-approvals, pre-qualifying and pre-approving, basically people who want to go out and buy a house. I mean, you are getting them ready to do that. So we're going to talk a little bit about pre-qualifying versus pre-approval because there's a little misconception about that. So we'll talk about that. But one of the things I want to just kind of say as an introduction is the market's wild right now. It's exciting.
Yeah, it is. It's we're as you know, we're at inventory levels that we haven't seen in 12, 13, 14 years. And as you know, you're getting into multiple offer situations too. A lot of people looking to buy houses now. Not enough sellers. We need more sellers out there.
We need more sellers. That's right. And the great thing about it is, if you list your house at the price it should be listed at, kind of your market value, you may get multiple offers to choose from. And one of the things that sellers always ask me is, when you're looking at multiple offers, you're looking at the price, and you're also looking at the different points on the contract, who's going to buy the survey, who's going to buy the title policy, those sort of things. And but one of the other things that you have to take into consideration is their financing. Are they actually going to be able to go through with this purchase? How qualified are they? And it's hard for the seller to know that.
Mm-hmm. Absolutely. I mean, the worst thing that you can have is you put your house on the market. It's a hot market. You kind of plan to move in 30 or 45 days because then that's when you're going to close. And all of a sudden, your house is off the market during a peak time. Mm-hmm. Right now is arguably a peak time.
All right.
And for one reason or another, the financing goes through. Whether it's an employment issue, an asset issue, a credit issue that wasn't properly vetted up front. And that's the worst thing that can happen for a seller.
It really is. I mean, they've made all these plans to move. They may be in the middle of purchasing their next home, and now their buyer can't buy. And now they're back on the market looking for another buyer. And what do buyers say when they see a house come back on the market? Mm-hmm. What happened?
Right.
What's wrong with the house?
Right.
It always becomes an issue of, okay, something must be wrong with the house. And really, most of the time, it's something's wrong with the buyer. They couldn't get financing.
Exactly. When we talk about financing, obviously your best option is a cash offer.
Absolutely.
Typically, your cash offers are not going to be the highest price offers, though, in most cases.
Right. Just stronger.
Yeah, just stronger. Exactly. Because you don't have to worry about that financing element. Mm-hmm. But when somebody goes to look for a house, and most people think that my first step in going to buy a house is going to look at houses. And that's really not the first step. Really, right. The first step is to get your financing in order, because the rules around financing have changed a lot over the last several years. Mm-hmm. And so your first step is really to get pre-approved, and pre-approval has become this sort of homogeneous phrase that kind of covers everything. But there are different levels of pre-approval. And that can affect how strong your offer is when it's presented to a seller for sale. So what I thought is I'd maybe take a minute to talk about the differences. I mean, the most basic level is what we call a pre-qualification. And what that means is that you've verbally or perhaps online given some basic information to your lender about your income, your assets, the money that you have in the bank for down payment and closing costs. And they've pulled a credit report on you. They say, okay, based on your credit report and the information that you've given us, you should qualify for X amount.
Right. You have pulled the credit at that point.
Right. We have pulled the credit at that point. The problem is we really haven't gone any deeper than that. Mm-hmm. And what happens where most of the fallout with a loan today is not really at the credit level. It's at the employment level. It's at the income verification level. It's at the asset verification level. It's at those points during the underwriting process.
You know, I'm glad that you say that, because that's what we see every day. It's not because consumers, I think it's a credit score issue, and it's not. And sometimes it's not even a debt to income issue. It's something that comes much later in the process when the underwriter's digging deeper.
Right. Absolutely. Absolutely. And so what we really recommend for the clients that we speak with to put them in that strongest possible position to buy is to really go with a formal pre-approval, or what is really a conditional approval. And that is a very different process. We still do that first level, but we go the extra step, and we request from the borrower all of the same documents that we would require when you're under contract and you're moving forward with your formal loan application. So those are going to be things like your bank statements and other asset statements for investment accounts, retirement accounts, all of those things, so that we can vet it, not only look at how much money you have in those accounts, but where did that money come from? That's become a big issue too, in terms of documenting money that's gone in that isn't normal payroll money.
Yeah,
we have to be able to document
sometimes it doesn't matter that you have the money. It
right.
matters where it came from or how long it's been there.
Exactly. So those are things we document. We also document their pay stubs. We look at tax returns over the past couple of years to make sure that their income has been consistent. One issue that we run into a lot when we talk to people, if we just kind of trust that, I make $100,000 a year, there's a big difference between somebody who makes a salary of $100,000 and someone who makes $100,000 that's through, let's say, commissions, that's largely due to bonuses, or that's due to self-employment income, because those are fluctuating sources of income. They could be high 1 month, 1 quarter, 1 year, and down the next. Right. So by evaluating all of those income documents, those pay stubs, W-2s, tax returns, we're better able to identify what is an income number that an underwriter is going to use to evaluate whether you can afford this house.
Right.
And then we also do other things. There are certainly things like looking at their IDs, their citizenship, some of those other things. How is this house going to be used? Is it a primary residence? Is it a secondary residence? We have had some borrowers that, maybe talk of something as being a secondary residence when it's really investment, and those are underwritten very, very differently. The criteria for those are very different. The down payment requirements are very different. So that's why it's real important that, whether you're dealing with us or whether you're dealing with another lender, that you go through that extra step. It may seem like you're providing a lot of documentation, like you're being audited by the IRS almost, but that's the level of documentation we need to get you through an initial level of underwriting and really make for a strong pre-approval.
I'm talking with Mike Lesmeister of Ameripro Funding, and he and his partner Rick do a lot of to take clients through the pre-approval process. For me, not only for sellers who have buyers that want to get approved, but also for buyers who are coming and looking for a home. And one of the things that I really like about your conditional approval letters is that you have gather the documentation, because otherwise when the house goes under contract, you're waiting on that buyer to find all those documents and get them to the lender, and that can slow down the whole process. So I know when I work with you that a buyer has, and they have a conditional approval, that they've turned all that stuff in. We don't have to wait on them. Once it goes under contract, you are able to move forward when you get the contract in your hands.
Exactly. And, how many of your listeners today, if you said, hey, we need your last 2 months bank statements, retirement, investment accounts, we need your last 2 years tax returns, W-2s, 1099s, your last 30 days worth of pay stubs, and some other things. How many people would be able to just kind of throw that together in an hour or two? Not many.
Not many.
Right?
Not many. Those aren't the kind of things you have sitting with the mail.
Exactly. And so
you're gonna have to dig a little deeper.
Yeah. And so the other thing when we talk about presenting a competitive offer is how long is it going to take for that loan to close, right? Is this going to be a contract where we can close in 30 days, 45 days, or 60 days? Obviously, as you know, to that seller, closing in 30 days is a whole lot more attractive than closing in 45 or 60 days.
Absolutely.
So, anywhere that we can shave off some time, where we can save a day, 2 days, 3 days, 4 days, helps us get to that closing table that much faster. It makes for a happy buyer who gets in their house a little bit sooner, and it makes for a happy seller who gets the proceeds of the sale of their home sooner.
That's right. I like the conditional approval. So really, you would recommend to a seller that that's what they look for, not really the pre-approval letter but get the conditional approval.
Absolutely. Certainly if somebody, wants to kind of look at a house, really quickly, and they just want to see if they're even in the ballpark of being able to buy a home right now, we can always do that pre-qualification and just do kind of a cursory view of their situation.
So they know what price point to look at.
Yeah, price point, or really if they can even buy right now, because a lot of that may be dictated by their credit.
Sure. Right.
But once we see that they really are serious about buying, that's when we definitely want to start collecting their supporting documents.
Well, and when someone's gone back through the file cabinet and pulled all these things that you need and gone to their employer to get the most recent information, all of those things, they are a willing buyer. They are ready and willing to buy. It's not someone who may buy the house. It's not someone who's thinking about buying the house. They're ready. They know they're going to buy. It's just, are they going to buy your house or not?
Exactly.
So I like those type of buyers, and my sellers do too.
Mm-hmm. Absolutely. They all do.
All right, you are listening to Houston Real Estate Radio. If you have a real estate question, you can call us at 281-882-8088. We always like to take your real estate questions. Even if you've got a lender-related question, we'll pass it off to Mike, get him to call in and answer it for us because we like his answers.
Absolutely. Happy to do it anytime.
All right. That's Mike Lesmeister. He and his partner Rick are at Ameripro Funding. Let me give you that website. So if you do want to go online and get pre-qualified, pre-approved, or get a conditional approval letter, you can go right to the website. It is HLSTX.com. That stands for Home Loan Specialist.com. And that website again is HLSTX.com. The phone number for Mike and Rick is 832-286-1600 over at Ameripro Funding. We appreciate you coming on the show. Always great information. One of the things that I forgot to ask you about, that I do want to ask you about, is the seller contributions. Are you still seeing very many of those?
It's less popular than it was before, because once again, that all goes to the strength of the borrower.
Right.
If they need seller contributions, perhaps they're not in as strong a financial position as somebody who doesn't need those. But you are still seeing those. Yeah.
All right. Good to know. You can find Mike at HLSTX.com. We appreciate you listening to Houston Real Estate Radio, and we're going to be right back.